So I've been waiting on this. This video was sponsored by My Money J, but more on that later. What's up, peeps? In this video, we'll be talking about my stock picks for 2025. Last year, we did pick some stocks, and everybody do what they're supposed to do. Honestly, when I put it up on screen, uh all of the stable stocks were relatively stable, except Massey. Uh, the growth stocks really grew. And the one that never did, which was Supreme Ventures, never really did that bad. I think if you add the dividends to it basically balance out. And then the dividend payers actually surprised me this year. They not only pay dividend 6.97% and 7.96 respectfully, but them actually grew a lot this year. Trans was 70.22, although I never had faith. I never lost faith in Trans. And Carreras, which really surprised me this year, was 57.42, say. And then the long haul, which I had, was JMB and Jamaica Brothers Group. Jamaica Brothers Group actually grew, and JMB never did so well this year. So it was January 8th, which was my birthday last year, and in this video now, which is January 8th, so January 8th to December 31st. Not a full year round, but yeah. So the picks for this year, starting off with everybody's favorite class, which is dividend investing, and in no particular order, here is number one. First one is Supreme Ventures. So Supreme Ventures is the most prominent gaming and entertainment company in Jamaica. It was established in 1995 and has games such as lottery games, sports betting, and even video game terminals. Primarily, the company makes its money through the lottery games and the sport betting terminal. However, it also has diversifications in business administration, hospitality, and financial services. Granted, one of those financial services is them venturing into remittances, so there is that. And the reason why it is a dividend stock on my list, well, the basic metrics on this is, well, the PB is 2.71, the PE is 12.18, and the 52 range is from the lowest 1950 all the way up to $27 this year. And the dividend coverage ratio that I'm going to use is 110%, which is high. But not like that is very high. Basically, it means that they have to be pulling from their reserves just a little bit to cover the dividend that they're paying out for this year. All right. And when I do the calculation, they only could, if worst case scenario, the company make no money for the year, can only actually pay out dividend one more year, basically before it shut down. So there is food for thought. The next stock on the list is my personal favorite, Trans Jamaica Highway. Trans Jamaica Highway operates the Mount Rochar bypass and essentially operate and maintain the toll. Now, in last year, they actually acquired the layman term, they say the toll booth that you pay through. So they acquired that, and it has been helping their bottom line significantly. So there is that. Essentially, it really operates the toll road, and these are all the toll roads that it actually operates, and they have more toll roads coming. However, the reason that it is on the dividend list again for the third year in a row is because it pays a little over 6%. All right. The basic metric is the PB is 6.01, the PE is 11.98, and the growth this year has been exceptional. So the low has been the low for the 52 week was 2.65, and the high was almost $5. So there is that. The dividend cover ratio for it is 62.58%, which means that they use 62 of their revenue this year, the net earnings, to cover the dividend payout. And based on the reserve, they only can do this about 1.5 times. So, there is that. Here's the fact that I think there will be more dividends coming this year based on what they said in their IPO. In addition to the fact that on the Portmore Toll Road, they are building a gas station. So at the very least, they'll be collecting an extra little rental income from that. So there's that. Hello people, so today's sponsor is My Money JA. I'm pretty sure at some point you have seen my screen look like this. Is because I'm constantly on it. It is, in the grand scheme of things, an investing app. They also have a website, so you can use either. This is an investment app that was made specifically for Jamaican investors. So if you're a dividend investor, you're going to love the dividend calendar. And if you're just a regular investor that interested in keeping up with the stock market at a glance and be able to manage your portfolio while being able to spot the best opportunities to buy and sell their shares, yeah, this is the app for you. So I'm not chat enough, and I really don't want to stretch this out, so I'll make a separate video on all the things you can do with My Money JA. But now, as one of their actual ambassadors, I have a 10% coupon code that you can apply at checkout, which is Garth876, and you'll get 10% off any of your purchases. Yes, there is a free version of the app where you can use and understand the very basics, but then if you want like analysis of companies and them some there, you're gonna have to pay for the pro feature because they pull on more resources. However, as I say, use my 10% coupon code at checkout and get the 10% off. You can try a month and then decide whether or not you like it, yes or no. So let me know how it is. I'll leave the link in the description for the website, or you can download the app. It's really up to you, and just let me know what you think. But with that said, back to the video. Next dividend stock on the list is, of course, again for another year, Stanley Motor Limited. Alright, Stanley Motor essentially is a real estate company that builds and then leases their properties out to different companies. They currently manage the 58 building that is in Half a Tree, that is literally across from the big flow head office right there. So they operate that and they lease those buildings to their tenants. A tenant is a coffee company. The other one is, well, the biggest one is the Alarica Call Center, or the business processing outsourcing company. And yeah, in addition to the fact that the managing office is on the complex as well. They paid out a dividend payment of 3.9%, which is not bad, honestly. And the 52-week high has been $5.10 being the lowest, all the way up to $8 this year. The PB is 2.76 and the PE is 0.63. Now here is where I applaud them, and that's why the payout is not so bad. Their dividend coverage ratio is 14%. Basically, they only use 14% of their earnings this year to pay out dividend. So that is very good. And when I did the calculation based on the reserve, they could last another 26 years of paying dividends without making any revenue. So that is good. That is the highest on this list. Can foreshadow from now. That's the highest on this list. Trust me. So the next stock on this list is, of course, Carriers. The current and still, but by a very slim margin these days, got chance on the tail, Carriers. Carriers is, in the grand scheme of things, a tobacco company. Alright? Not all tobacco, they have been venturing into the electrical cigars, but I guess more on that in another video. Essentially, Carrier is a subsidiary of the British American Tobacco Company, and the British Tobacco Company only owns like a little bit more than Jamaican, which stands at 50.4%, while the local market owns 49.6%. Alright, and it is currently, and for the longest period now, the dividend king of Jamaica as it comes to stock. However, their PB is 27.71, their P is 18.58, and their 52-week at the lowest was $8.11 all the way up to $15 this year. The dividend cover ratio, however, is 104.15, means that they're basically spending all the money that they made this year to pay a dividend. Granted, last year they did spend a little bit less than the 100%, so I guess this is where it's coming from in the retained earnings. And when you check the actual retained earnings, they only can cover 50% of the dividend that they paid out this year, in the event that they don't make any money next year. So, yeah. But I don't believe that going to happen. So, there is that. And the new stock on the list as it relates to dividend is Cygnus Credit Limited. Alright. When I was some drop a video the other day, I bashed them preference share. But this is not a preference share, I'm talking about actual stock. So, yeah. So we'd already go over what Cygnus really does. Ideally, they specialize in private credit investments. In the grand scheme of things, they are the entity that facilitate lending small and medium-sized companies money that they can't necessarily get from a conventional bank. Alright? And the way how they generate money is quite a few ways, honestly. You have, I can never pronounce this word, mezzanine financing, which is a mixture of debt and equity financing. They have interest income, private credit investments. They have fees that they charge you for lending you the loan. They have capital appreciation and portfolio diversification. As it relates to the portfolio diversification, you know, they venture into tourism, real estate, and distribution. And the reason why it's on this list is because based on the dividend percentage that has been paid out this year, it has paid 4% dividend. The PB is 0.34 and the PE is 2.62, which is very good. The 52-week high and low being $10 this year and high being up to 13.5. So not really a big gap, but you know, growth is regardless. And I say they paid out 4% this year and the dividend cover ratio was only 56.36%, which you know is like roughly half of their income they made this year they paid out in dividend. And when I did the retained earnings, they could do this for another 3.5 years, assuming they never get no more money. So that is good. So we have a new dividend stock on the roster. Now on to the growth stocks. And the metrics that we're going to be using for the growth stocks is DuPont analysis. Alright, it's just really highlighting what is the main driver of a company. Alright. And the first on this list is Regency Petroleum Limited. Regency Petroleum was established in 2018, meaning it is relatively young compared to the other more prominent gas stations. And essentially they generate money in a few ways. The first one, and the one that they normally do, is the LPG, which is liquefied petroleum gas. And they sell this in bulk to hotels, restaurants, bakeries, and whatever industry that requires some substantial amount of gas, they service it to them. Predominantly, they are more on the western side of the country. However, since IPO, their aim has been to come more toward the east, where they already have gas stations in the west. Now they're trying to come more toward the east. And they don't only make money in the gas station by selling gas, they also have delis and those stuff. That generates some revenue for them as well. Now, when initially I did the stock review for RPL, it was too young, never really have much financials to work with. And now, seeing the DuPont analysis, I was wondering if it was my calculations off. But no, it was not. It wasn't my calculation that was off. It's just that they've been doing a lot of stuff that has been straining their financials, but it is in hopes of everything getting better. As you can see, the leverage significantly fell because you know the IPO them pay off everything, but it has been coming back up, but it's nowhere near to what IPO was. All right, and you have to understand that essentially what this company is doing is that it's trying to penetrate the market. Pause. It's trying to penetrate the market, and it has been doing a lot. All right, one, they signed that you just gas to get gas more into the eastern side of the country. They already have the western side relatively locked, so they've been trying to, you know, push towards the east. They've also completed the service station at Westmoreland, yeah, Paradise. So there is that. And last year they secured the loan. Well, year before last really, but they secured the loan to get the service station on Spanish Town Road stretch right there, so which I drive past and see it, and it almost finished. More than likely by mid-year this year or so, it should be finished, or probably earlier than that. So yeah, I wasn't honestly, based on their plans and everything, I never actually expected them to actually even pay out the dividend or that, because they're using most of the money to invest for a future. So why I say this is a growth stock is because all of its growth is ahead of it. One, because young, and two, because where they're heading is where the money is. Yes, selling one gas pan to persons makes money, yes, but selling the actual gas station, especially in the urban area, will generate more money. And honestly, it's just time for it. Just wait and see how it goes. But so the PB is 64.11 and the PE is 10.73. And the 52-week high and low was $2.01 and the high was $3.46. And the next stock is HONBUN. I've already made a video on HONBUN, so I'm pretty sure a lot of persons know about HONBUN regardless. I personally love them. Whatever, rum cake? I don't know. It's a vibe. Anyways, HONBUN produces stuff like bun, donuts, and other confectionaries, and they distribute it to schools, anywhere that sells it. So school, you know, supermarkets, etc., etc. They typically normally have a whole shelf for themselves. So yeah, kind of product actually tastes pretty good. Alright. And honestly, last year I wanted to put it on the list. However, I never really had a full reason to even say, oh, why would to say yeah, put it on the list. However, actually had to put it on this year. Alright, so the PB is 14.25, the PE is 2.61. The 52-week highs and lows being as low as 5.67 and high being as high as 8.99 is fine. Now there are a few things. One, HONBUN pays dividend. It pays about 2.66, so even though it's a growth stock, it still pays dividend. Two, in June of this year, it acquired Swirls. Alright, and they say, read it, basically future investment in this fast food business, including new shops and equipment and strategic location, estimate about 50 to 100 million over the next 2 to 3 years. Alright, when I go to school, I usually buy from Swirl. It's literally in the bus park. Not sure if that was a location, but we'll figure that out. And there's a normal park. Sometimes I have to actually wait outside. But yeah, so they sell evidently swirls, and other pastries and maybe like milkshake and them something there and them something there, which is cool. I don't know if it's, as I say, if it's just that location alone there, but if they are able to actually even just put in even 2 3 other locations somewhere else all over Jamaica, can make money while even incorporating some other menu items on it with HONBUN products. You know, them have to make a good like a piece of change for themselves. As it relates to the quant analysis, the main driver that I'm seeing over the last 4 years has been return on assets, meaning that they're using their assets more efficiently to generate more money. So there is that. The next one on the list, the next one on the list is tropical battery, and other incident that incorporate them, and it will be in the next video coming up after this. However, essentially tropical battery, as it states, sells batteries and other accessories for trucks, cars, automobiles, automobiles, automobiles. Yeah. In addition to the fact that they also do solar. Where the growth lies is in their push towards EV. Alright, the push towards EV, that is where the growth lies. However, so when I was looking through JC, I stumbled on this. I don't even know if I call this. So there's two things actually. One, the tropical mobility. Essentially, they signed a memorandum of understanding to say, hey, they'll service the Teslas in Jamaica. So essentially, they saying the company sold 700 EVs over the past 6 years, and 320 of that was from the Tesla models, which honestly are rookie numbers, but because memorandum of understanding would incorporate training for those personnels to service EV, they could use those said individuals to kind of, well, at least I hope they're thinking this way, to use those skills and service other EVs in Jamaica that are more prominent, like the Build Your Dreams and most of the new cars that are coming out. Additionally, they had purchased a new property for $950 million, which is essentially just a new service area for them. And this is in Ferry Pen in Kingston. So that should help, have more persons coming in, etc. etc. And the base image is PB is 16.09 and the PE is 2.69. The 52-week high and low being $1.76 and high being $2.75. Now, as it relates to the DuPont analysis, main driver is leverage, which not necessarily a bad thing because they have been acquiring new stuff, so it should show better in their balance sheet, and it's not drastical compared to the other metrics, so they should be good. No, one of the other reasons why I feel like tropical battery going actually go up a little bit, because there's some noise about our APO. I don't know how much that noise is. But yeah. So having like a few shares so that you are a shareholder, so that you get the APO prices at a discounted price, is not really a bad idea. Personally, this is financial advice, so yeah. The next stock that I actually wanted to put on the list but can't really, but it's an honorable mention, is Wigton. Alright. Their PB is 22.87 and the P is 2.73. The 52-week high and low being 71 cents and high being $1.70. But here's the thing. Wigton have enough work to do, and the fact that why I can't even say is growth for them per se is because JPS have them in a chokehold. Yeah, in addition to the fact I don't think they have the capacity yet to service what the government wants per se from them. So I guess they need a few stuff. They need a few stuff to increase their capacity, and then they need the government to mandate JPS, which is the sole distributor of electricity in Jamaica, to start using more renewable energy. Currently, JPS sits at around 13%. I think, yeah, around 13% has released the renewable energy, and they say, well, the producers aren't producing as much, so we say, all right, Wigton, your time to shine, because government wants it to be 20% renewable energy by 2030, and then them change it to 30%, and then them change to 50%. So from 13% to 50% kind of a long way to go. There's the potential for Wigton to grow, but it never really made the list. It never really made the list. It was just an honorable mention. But the last company on the list as relates to growth is Cargo Handlers. Cargo Handlers is, as the name so says, a cargo handling company in addition to logistics. It operates on the Montego Bay side of Jamaica, and essentially the company provides stevedoring services and facilitates the loading and unloading of cargo off ships, as well as it assists with customs and them duties. And of course, they have both customers local and international. However, the reason why cargo handlers is on my list is because beautiful company, beautiful company. All right, their PB is 21.88 and the PE is 4.54. The 52-week high and low being $8 and high being as high as $14.92. They are also a dividend company paying about 2.6%, which is good for a growth company. And as relates to the point analysis, as you can see, leverage falls and every other metrics is increasing, meaning that they're being more efficient with what they have to make money while reducing leverage, which is very good. I did make a comment here. Very good company. But here's where cargo handler growth is, and it will essentially plays cleanup for the most part. So they made an investment in about 2021, and essentially that investment was to buy 30% in Buying House Cement Limited. Essentially is just a cement company. They also do steel and them some there too. But Carib Cement, which is also on the list of stocks but on the stable side, normally can't facilitate all the demand locally. So Buying House Cement does the rest. And initially cargo handlers spent $105 million buying the 30% stake. And in 2022, that 105 million turned $191 million, and in 2023 it turned $295 million. Based on this, it's probably about 300 odd they're going to be going this year. So yeah, the growth is in front of them, as well as the fact that in the grand scheme of things, believe it or not, a lot of persons are shopping more online. So that going really be one of those big factors that actually affects the growth. So more people shopping online, plus their purchase of said company has been doing wonderful numbers for them. So yeah. Now for the stable stocks. And the metrics that we're going to be using for stable stock is the Alman Z score. And the first on the list is Kingston Wharf. Essentially, Kingston Wharf is a multi-purpose terminal port within the Caribbean that is operated in Jamaica. It's literally after you finish the Portmore toll, basically. And the way that Kingston Wharf make money is evidently, whatever customs related stuff, logistics, cargo handling, and of course warehousing. And the reason why Kingston Wharf is in the category of stable stock is because, if not anything else, it has been around for a very long time. Additionally, it has done several acquisitions to help grow not only its capacity but also its offering. Plus the fact that yo they make billions of dollars and you don't casually disappear making billions of dollars. So there is that. Now the basic metrics are the PB is 14.92 and the PE is 1.01. 52-week range is $24.01 all the way up to $35.23. And of course, the metrics that we're using is HONBUN Z score, and the aim is for the company to be over 3. And in Kingston Wharf situation, it is currently standing at 3.26. The second stock on this list is Jamaica Broilers Group. But ask the question again. You gonna stop eat chicken? Now, Jamaica Broilers Group, one of its most popular subsidiaries, Bestress Chicken. However, Jamaica Broilers Group main revenue stream entitles the breeding, the processing, and the sale of chicken and chicken related products. Alright. I did say this before in the video that I did about Jamaica Broilers Group, is that they sell chicken, which they are the sole provider of chicken to KFC, Mothers, and several other fast food chains that we know and love and can't do without. But also those farmers that you see selling chicken individually or independently still get their chicks, which is baby chicken, plus the feed, plus the injection from Jamaica Broiler Group. So they're not going nowhere. And they not only operate in Jamaica, they operate also in the USA where they're making strides. Granted, they were in Haiti, but they have departed from that. Um, yeah, and it affected their sheets for a few years, but I would say they have rebounded quite well. And not only chicken, but Jamaica Broiler Group also divests in agriculture as well. So the basic metrics for it is the PB is 1.56 and the PE is 8.39. The 52-week range is as low as $30 and as high as $42.31. As relates to the HONBUN Z score, the 2024 financial was not out yet, so I use the 2023 one, and it currently stands at 2.97, which is shy of the 3, which is not bad. Granted that they had a very big exit, that is good. The third stock on this list is Separate. And Separate is in the business of not only manufacturing but distribution of edible oil and fat, milk, and sweetened condensed milk. It was founded in 1944 and was listed on Jamaica Stock Exchange in 1985, long before me got. And Separate owns numerous brands and also distribute for numerous brands. Some brands such as Supplegen, Betty, Butterkish, Chiffon, Cool Fruit, Gold Seal, Golden Grove, Linda, Miracle, Surge, Swizzle, and many more. Like, Separate is literally engraved in our culture. Right? There's a lot of stuff that Separate distributes and manufacture that we have grown to know necessarily can't even live without. So the basic metric for Separate is the PB is 11.61, the PE is 40.54, and the 52-week range was as low as $75, which year before last it wasn't even nowhere close to that, so it's been growing as well, all the way up to 92.40. And Separate has been acquiring a lot of companies through a lot of companies. One of its companies is the AS Bryans. As it relates to the HONBUN Z score for Separate, it currently stands at 2.34, which not necessarily the 3, but it's still above 1.8, which is, the kind of antsy part. The fourth stock on this list, everybody Grace Kennedy. And Grace Kennedy falls in a special spot called conglomerate. Means that they have their hands in so much stuff ingrained in not only local but international, that they're not necessarily classified in any one industry. Alright? Just like how separate can be manufacturing and distribution, Grace does that on the weekends. Grace has so much moving parts that it is funny. They're in finance, Western Union, they have banking, they have insurance, they have evidently, food and distribution and manufacturing. Them even have cars, but then I guess them sell that. So yeah, so Grace they everywhere. I don't even know, like Grace was around long before even Jamaica get independence. So I don't think it's going anywhere soon, because it has been around since 1922. And another thing is Grace is one of those stocks that is cross-listed, means that this is on multiple exchanges. It's on Jamaica Stock Exchange and Trinidad Stock Exchange. So Grace PB is 0.91. Its PE is 9.23. Its 52 week long is as low as $71 all the way up to $87. And its Almond Z score is 1.94. Yeah, I think Grace has crossed the borders to use a 6-step. However, when I was doing the calculation, Grace balance sheet is all together. So it's kind of difficult to, decipher what is current assets and what is current liabilities. So that number may be skewed and it actually may be higher. But for now, what I could have discerned, it is at 1.94, which as I say is still above the 1.8 where it started entering critical territories. So yeah. The next stock on this list, which is number 5, is Wisynco. And Wisynco is the leading manufacturer and distributor of beverages in Jamaica. Alright? I'm pretty sure you have drunk something from Wisynco, and even if somebody case they have never drunk any juice, they also own the brand Water Water. They own the brand Water, Can Water, Boom, which I've drunk a lot of to stay awake, and Bigger. Alright? In addition to the fact that they distribute for Coca-Cola, which has hundreds of brands, Worthy Part Estate, and they have a 50% stake in Citrus Trading, which is the company that makes like True Juice and them things. So yeah, Grace has everything separate, locked down the food and the sweeteners, and we basically lock down the beverages. In addition to the fact that they also distribute foam, styrofoam, so box food and them things there. Yeah. So we are cooked. We can't do without it. Now Wisynco's PB is 3.12 and its PE is 15.97. As it relates to its 52 week, it went as low as 19.88 all the way to 23, which as you can see is not a big gap, so it's been relatively stable. As it relates to its Almond Z score, because Wisynco is so cash rich, their Almond Z score is 7.32. I mean that essentially they have doubled the standard of where you would have to work. So yeah. And the last stock on this list is Carib Cement. Jamaica has been in a very building phase, and they have been reaping the rewards to the point where they cannot supply the needs locally, much less internationally, and that is why cargo handlers buying whole cement, eating up the what's left essentially. And Carib Cement is the sole manufacturer of cement in Jamaica. The company produces a high quality Portland cement and other related products. So yeah. And as I say, she Cygnus borrowing money to go build another Belmont. I don't know if you see the building. So build another Belmont. And there's just so much things being built in Jamaica. So once it is infrastructure, Caribbean will be in business, and we are just building out Jamaica. Really, it's just Kingston alone. Really, like below Kingston, Montego Bay. There's 12 other parishes that need the skyscrapers. So we'll be fine, and it shows on their financials because their PB is 12.18. Their PE is 2.71, and they have been growing this year. Proud of them. Their 52-week was as low as 50.50 and as high as $92, which is literally almost doubling the price in 1 year. And as it relates to the Alman Z score, it is 7.24, similar to Wisynco essentially. They are nowhere going bankrupt. So, yeah. And that is it for the stable stocks. Anyways, thank you guys for watching. Yeah. And that is it for my stocks for 2025. Thank you for watching, and of course don't forget to like, share, comment, subscribe, tell a friend. With that said, of course, love you guys. I'll catch you next video. Peace.